Well, on Thursday, General Motors announced that they'll be partnering with Tesla to gain access to the 12,000 EV charging ports across North America. GM CEO Mary Barra stated that the new deal will save the company up to $400 in EV infrastructure. $400 million, thank you. And like Ford, General Motors will start installing Tesla's charging ports in their vehicles starting in 2025. Joining us is Roth Capital Partners Senior Research Analyst Craig Irwin. Craig, it's good to see you. We've been sort of trying to figure out what exactly this means. Among other things, are there financial implications for Tesla? Like, this is obviously being seen as a win for Tesla. I'm just trying to figure out why.
So Ford and General Motors, obviously it's good for both of them because their customers are not going to deal with the issue of range anxiety. Range anxiety is actually very real.
Have you ever wondered why a car company would be willing to lend a helping hand to its competitors? Why Tesla, a trailblazer in the EV market, would extend support to those vying for the same slice of the pie? Today we have a mind-boggling revelation that will challenge your perceptions. A topic that might seem counterintuitive at first glance, but gives investors an insight into why Tesla may have been making some moves lately. In the course of this video, we're going to unravel the mystery and explore the intriguing reasons behind Tesla's unexpected alliance with its rivals. So stay with us as we take you through this eye-opening discussion that will leave you questioning everything you thought you knew about competition in the electric vehicle industry. Be prepared to have your perspective challenged and your curiosity ignited.
Tesla shares higher after GM followed in Ford's footsteps with plans to use the EV maker's charging network. The stock extending recent gains up another 4% today, on track to close higher for the 11th trading day in a row. For more on what this means for Tesla and the broader EV market, we want to bring in Colin Rush, Oppenheimer Senior Research Analyst. Colin, it's good to see you here. So what does this mean for Tesla? Has Tesla won the EV charging wars?
I don't know if there's an EV charging war. What they're trying to do is facilitate EV adoption. And a couple things are happening with this. Is one, you're getting a standardization on plugs. It's just going to simplify, manufacturing for those connectors across the industry. We think that's a net positive and a savings for everyone across the industry. Secondly, we don't need a million networks of charging. And so Tesla's already built out a fairly effective fast charging network, but that's not necessarily going to be the bulk of how charging happens. Most of the charging actually happens at home or at work, where most of these cars sit idle, and it's really a top-up market. And so you've got some fast charging that'll happen, but the bulk of the charging actually happens with level 1 and level 2 chargers. And so, the stock that we cover, ChargePoint, is sold off today, and we think that's going to ultimately be a net winner. It's a buying opportunity right here on some confusion around how the usage patterns are really changing for vehicles as we move towards EVs.
Tesla has held a bright spotlight over the years for its ambitious plans involving EVs, autonomous driving, AI, and robotics. The company's new and emerging technologies have captured the essence of the EV transition. For instance, the car company remains the market leader in the EV market in the US, with more than 50% share, selling more cars than the other 17 automotive groups combined. Tesla is dominating the US EV market, while other automotive giants like Ford, GM, Stellantis, Volkswagen, and Hyundai are struggling to provide competition for anything. Tesla's competition and its competitive advantage is what's keeping it above these other car companies, further proving that the EV is far better at the EV business, and it's really good at making them too. However, while Tesla is already considered a global EV leader, the automaker may be granting access to the very things that make it stay in this leading position. Hey guys, welcome back to Tesla Tomorrow. Tesla made a big deal with its rival Ford and GM. And while the advantages for these companies are obvious, it's not entirely clear what the gains will be for Tesla and what it's going to reap from this arrangement, and whether or not it's going to outweigh the potential loss of goodwill from its notoriously loyal customers. From a more financial perspective, it's not entirely clear what exactly the terms are for the Ford-Tesla agreement. But seeing that these collaborations are actually opening up key aspects of Tesla's business to its competitors, it is important that these questions do get asked. So why is Tesla helping its competition, and what motivates the automaker to lend its expertise and support to these companies? Let's dig deeper into the intriguing world of Tesla's collaboration with its rivals. But before we start, if you like this type of content, hit that like button, subscribe to the channel, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla has said that its overarching corporate goal is to accelerate the transition to a sustainable future, in part through the electrification of the transportation industry. The automaker's approach to helping its competitors can be summed up in the phrase, "A rising tide lifts all boats." By assisting other automakers in their electrification efforts, Tesla aims to bolster the entire electric vehicle industry. One of the astonishing reasons Tesla is helping its competition lies in a shared objective: the acceleration of the global transition to sustainable transportation. Tesla recognized that collaboration, even with its rivals, can drive the adoption of electric vehicles on a much larger scale. When more electric vehicles hit the road, it accelerates the development of charging infrastructure, increases public awareness, and stimulates the demand for sustainable transportation. Ultimately, this does benefit Tesla by expanding the overall market and solidifying the company's leadership position. Tesla understands the power of collaboration and recognizes that innovation thrives in an environment of shared knowledge. By helping its competitors, Tesla fosters an ecosystem of innovation, pushing the boundaries of electric vehicle technology. Through partnerships and information sharing, Tesla not only strengthens its position as an industry leader, but also contributes to the advancement of the electric vehicle industry as a whole. Another factor driving Tesla's collaboration with its competition is its increasing stringency on regulatory requirements for emissions and environmental sustainability. As governments worldwide tighten regulations, automakers must navigate complex compliance standards. By sharing its expertise and technologies, Tesla assists its competition in meeting these regulatory demands, promoting a cleaner and greener future of transportation. But there are a few positive sides to this, and it is important to remember the ones for whom Tesla is actually making its products for: Tesla customers and car users. Whether or not Tesla gets a financial boost from opening up supercharger stations to Ford and GM, the company is taking on a big risk. One selling point of Tesla vehicles has been superior access to superchargers. If Tesla owners start seeing Ford and GM owners taking their spots, or worse yet, taking up all of the spots on a given location, it may not go down well with Tesla users, since now they've got to share these charging resources with owners of other brands of EVs. Similarly, it is important to note that these companies actually acknowledge Tesla's lead. When GM CEO acknowledged that Tesla has a lead in EV technology, profitability, and scale, she also said that lead is not permanent, predicting EV and combustion vehicles will actually equalize in cost over time in the latter part of the decade, or maybe even a little longer. For Tesla, the benefits for this collaboration should be beyond the financials. Also, the more steps Tesla takes to give up key competitive advantages are actually going to give shareholders more worry that the company and its executive team might not entirely have their financial interests aligned with their own, even though the whole collaboration may be perceived to be in Tesla's best interest. Tesla's collaboration with competitors can be seen as a strategic move to achieve economies of scale. As the demand for electric vehicles grows, manufacturers can benefit from sharing resources, supply chains, and manufacturing capabilities. By pooling resources, Tesla and its competition can actually drive down costs, increase efficiency, and accelerate the production of electric vehicles, making them more accessible to a broader customer base. Furthermore, Tesla's partnerships with its competitors aims to expand the market potential for electric vehicles by nurturing a vibrant and competitive electric vehicle market. Tesla actually does this to ensure a diverse range of options for its consumers. So maybe there are actually benefits for these collaborations. Maybe Tesla is creating a powerful wave of transformation that disrupts the dominance of internal combustion engine vehicles and accelerates the shift to sustainable transportation that will benefit all. But what do you think? Let us know down below, and let us know what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.